Hello, everybody, and welcome to today's episode of Trade the Chain, the largest crypto show on YouTube that nobody watches. I'm joined by our Director of Research, Nick Mancini, and Trade the Chain's everyday guy, Doug DeRosa. I know Doug's traveling. That's a scenic view behind you. Are you in the mountains of Wyoming?
Oh, of course. I'm on my ranch in Yellowstone. Yeah. Or visiting family at the Jersey Shore. Probably the second one. Yeah.
One last dip in the ocean before the market collapses. I get it. Folks, today we're going to talk about the market and the redness of it, and why we still feel we're not hitting those bottoms that we all want in order to have that generational wealth reversal. First thing we're going to do, let's head over to the macro environment here. We got right now the most bullish coins on daily sentiment here. DFI with a score of 80 up 3.46%. We also have in that group MXC with a 77 score up 11.5%. And followed and bringing up the rear of the top five is Keep with a 73% score up 3.3%. If you go over to bearish, you could see KCS there second with a score of 10. STX, GLMR, that's Moonbeam's token, a score of 24, up 1%. But if you are a subscriber of our free newsletter, which is pinned in the live chat here, you can sign up for free, so no worries. You don't have to reach in your pocket for anything. You may see some news on GLMR coming out today on our Coins on the Move. So see that, a little front running of inside information. Going over to the 1 hour price chart, things are mildly down right now. Bitcoin has been hovering between the high 19s and low 20,000s for the last, let's call it 36 hours, making people kind of trepid in trading right now. But you can see the 30-day change for both Bitcoin and Ethereum up here is 13% and 5% respectively, down for the trailing 30 days. But look at this relative trading volume over in the upper right, up 25% for Ethereum, up 21% for Bitcoin. So this is getting heavily traded. And those volumes are building up. We're going to go over to Nick now. He's going to break down what those volumes are doing with price action and where we think our support and resistance levels are going to be.
Yeah, so best place to start is always with the S&P 500, as we typically do after gauging sentiment. This was, back last week when Powell spoke. And we've been kind of just on a downward trajectory ever since. And I'll just draw this trend line just to understand where core resistance is. So we're right at where you would expect support to be. I think support can go all the way down to about 39.50 and still potentially catch. But obviously, seeing another potentially bearish engulfing candle pop up beneath these wicks. If this breaks and 39.50 does not hold, then like we said before, we're likely headed back into the low 3900s, potentially high 3800s. Makes a lot of sense. For Bitcoin, we are basically at the center of the previous range, hovering around 20K. We're now beneath it. It's likely that we'll probably see these lows if the S&P does not catch. I mean, just because we're staring at a fresh hourly as well, which is also something to take with a grain of salt, as it's trying to catch at the recent lows. Probably won't. But obviously, I'm not going to trade off of that 1 hour, 6 minutes in. So really, what I'm looking at is, if 20K doesn't hold, then we're, for Bitcoin, we're probably back down to 19.5. And then if 19.5 doesn't hold, then we're dipping into the 1900s. And, I think a lot of bulls are really praying that let me try and zoom out here a little bit. Go to the daily. It's a little wide. So I drew some support lines here. Bear with me as we zoom in, considering how freaking large and volatile this chart is. Drew some support lines here. So basically, if the lows does not hold of 19.5, probably see 19.2 as kind of a last ditch effort to catch, which would make sense with potentially some try at a reversal. But really, you know, where the strength would be if it was to try and form some sort of reversal, maybe back to the top of the range, or maybe back mid-range for a very complete head and shoulders, would be right around 18.8, 18.7. As you can see, wick touch here, wick touch, wick touch. And then, of course, if that level fails, then we're back down to the recent lows, and pretty much it's no man's land after that. So this is a very ugly daily candle formation as well. You know, it is a bit of a bull hammer, but you basically got a flat daily, kind of more or less flat, another flat daily, and then you're kind of forming, you know, what you would expect to be a bull hammer. And I think we're going to see a lot of daily sentiment and hourly sentiment pick up. You know, I think this is really where people would expect a last ditch effort for some strength to ride. But of course, you know, we've seen this swing failure pattern beneath this 19.5 level before, and we've rode that higher. And of course, we are a bit oversold. Not to say that we can't, of course, be more oversold based on precedent. So very weird area to trade in. If you're not really trading these range moves, then you're probably, you know, kind of a bit frustrated at, you know, trying to short, trying to long. Of course, 20.4 has been a big stalwart, so I would expect that to continue to act as supreme resistance if we end up heading back in that direction. It is worth mentioning that DXY is starting to form, you know, potentially a toppy pattern. It actually looks very similar to Bitcoin this morning before it came down. So this is, of course, the Bitcoin 15-minute channel or candles. This is the DXY 4-hour candles, but you can see it looks very similar in terms of structure. And so DXY may end up taking a breather. Now, DXY takes a breather, it would make sense that equities, you know, take a breather in a bullish direction, meaning getting some relief. So we'll watch this trend line to see if, you know, if 39.50 can hold. Potentially this trend line can break and we may try and make a move higher. I would say that's more or less dependent on DXY breaking down beneath the 108 level. So that's something to watch for if you're kind of watching in succession. DXY dollar strength means risk weakness. And of course, if equities are looking weak, then Bitcoin is as well. I'll be talking about this on CoinDesk TV shortly. You know, we're still very in line. I think actually probably a daily perspective is better. We're still correlated, but look at the weakness in, you know, this is the S&P, this is Bitcoin. So Bitcoin notably weak in comparison to the S&P in terms of overall price action. So it makes a lot of sense that if we start seeing more S&P weakness, that Bitcoin grows more weak and we start talking about, you know, recent lows again, you know, meaning June lows and things like that. So for ETH, you know, very similar structure as compared to Bitcoin. You know, if I think, you know, this trend, it seems very valid, could potentially turn into an ascending wedge, but it does kind of look like it's rounding already. So maybe we get another push up to recent highs. Maybe this POC, so 1590 to 1610 potential target if you're longing in this direction. Stock RSI does look like, you know, we could see some sort of short-term reversal maybe into the evening. Asia, oddly enough, last night bought heavy into the evening and then ended up selling off towards the end of their trading session. So typically they end up working in patterns, and we kind of saw that 2 days in a row now. Buy here, you know, this is 6 p.m. PT, so 9 p.m. ET. Buy here, loop down, sell. Buy here, loop down, sell. Do we get another one of those before maybe a full kind of, you know, head back down to 1500 ETH, something like that? So that's also plausible for Bitcoin as well. If this level holds, we could end up moving back towards 20.4, 20.5, and then rolling back over. So I'm currently flat, no trades. If, you know, I think the better move was to trade the short this morning that we suggested in the Trade the Chain community. That obviously came to fruition quite quickly. There is your one trade of the day. We've pretty much been hitting those every single day. So fantastic, you know, 15 to 2 hour, 15 minute to 2 hour morning trade. We've been nailing those, and that's the trade. I don't think it's smart to trade lunchtime US markets. I would prefer to see how they close and see how Asia opens. Of course, the daily also closes at 5 p.m. Or 8 p.m. Eastern time, 5 p.m. Pacific time. So that's also been a great trade as well to see how traders are reacting to the daily and then how continuation is going to happen the next day. So that's how I'm trading it. Flat right now. I would say, just like we spoke yesterday, there's a chance that we get another little lift higher into the evening and then maybe a sell-off. Tomorrow is September 1st. There's been a lot of chatter about bearish September, red September, wake me up when September ends. No.
That's a Green Day song.
That's a Green Day song.
He's here all week, folks. He's here all week.
So, so it's going to be interesting. I would say that, given precedent, I think I saw a stat that the highest increase for a typical monthly candle on September is about 4%. So, maybe, and I think this is going to be really weird because we are in a weird position. Jerome Powell really wants to tamp down the markets. And I have an interesting feeling that unemployment is going to come in a bit stronger than expected on Friday, which will likely push things down. We'll talk about that in time, of course. But I think it would make sense that we potentially ride down, have a quick recovery, scare everybody, and then just start heading down again. So I think the better play for any macro month of September play is to wait to see what unemployment comes in at on Friday, because that's obviously going to dictate very likely what we end up seeing in the FOMC meeting, which is going to happen on the 22nd of September. I think swing shorts at peak levels, 20.4, 20.5, 1600 ETH, if you're placing a swing short for the month of September, not a bad time to do it at that level. But I would wait to see how the data ends up reacting before placing, a potential 2, 3, 4 week long swing trade. But I do know many that are in multi-week swings. I think I'm in one from last week that I've had a small one sitting in, but nothing crazy.
Hey, Nick, I have a question. This is based off an article that came out, I guess yesterday, which you guys probably touched on. It said Ether Bitcoin could see turbulence as open interest leverage ratios are at record highs. So we discussed this a week or two ago with the S&P futures. So what do people do with this information? It's so confusing. People look at this as a bullish indicator, right? If everybody's short, it's got to go one way and probably the opposite direction. What do our listeners and our members that trade the chain, what do they do with this information that ratios short interest position as all-time high? Is it even usable information, or is it worthless because you don't really can gauge a way on it?
It just means that the opportunity for a squeeze is high, which means that the shorts could get reversed. So anytime shorts or longs are at all-time highs, then great opportunity for a squeeze. But also, what it's telling you is where the is. And typically the crowded trade is wrong, although we've seen plenty of crowded trades work out before. So what that typically means is, based on our analysis and the fact that you typically see a 3 to 4% rise on the monthly before it ends up dropping, that could be a catalyst for a short-term rise. And that's why I'm saying don't play swing shorts now. Wait till you see some data come in, wait till September starts, and then try to tag some of those levels. Because, although I am bearish for the month of September, it's entirely plausible that for some reason we just get some sort of God candle back to 20.8, 20.6 or something like that, and have a big swing failure pattern heading into September, which would of course wash out most of the leverage at this level if Bitcoin were to rise $1,000, because most people typically over leverage themselves. So in that scenario, it just means that you should probably have a hedge if you are short, and you should not be completely naked, because if you are naked, then you could get squeezed.
Right.
And I think, it's nothing immediately actionable. It just tells you that there's a lot of risk in one direction. And if you're seeing that, much people with a lot more money and control in the markets are also seeing that, and are probably likely to try and take advantage of that.
Excellent.
So, Nick and Doug, I want both your opinions on this. As we look at sentiment chart right here, so this is the Bitcoin sentiment chart. Sentiment is in green and red, reflecting whether it's positive or negative, and then you have the blue line, which is the price. We have sharp downward price action going on with Bitcoin. We have negative sentiment. We have data being reported on Friday. Nick, Doug, what are your gentlemen's feelings about us going? Are we going to have a relief pump? Are we going to keep going down, or what are we doing?
September definitely new lows, in my opinion. Well, not new lows, at least equal lows. Whether we see a pump, I mean, Doug laid out the case: is shorts may cover because they get squeezed. That, in my opinion, is the only case for a pump, due to the fact that there's quite literally nothing inspiring about the macroeconomic picture right now. Other than the fact that the Fed cannot get unemployment to where they want it to be, which is interesting because it's unfortunate. And for those listening, basically, Elizabeth Warren will yell from mountaintops, Fed's going to increase unemployment, people are going to be out of a job. Yes, but it's either that or you keep paying 8% more per year on average for all of the goods and services you buy. So it's a rock and a hard place, quite literally. So at the end of the day, the Fed is going to do what they want to do, or they will fail, which means that we, as the U.S. economy, or participants in the U.S. economy, will be hurt extremely badly, in the worst case scenario. So I believe that the Fed has to take more action, will continue to do so, which likely means lower price action. Plus we have EU energy, plus we have China and Taiwan scare. So nothing really good is coming out in the next 4 weeks, in my opinion. But the reason we would squeeze is because maybe we hit a technical level, someone comes in on a big buy, momentum rides up, shorts cover, boom, 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 and then that forms that swing failure pattern back up to 21, maybe maybe into 21, and then we get rejected and then start slicing back down. Of course, that is dependent on the S&P 500 participating in that type of price action as well. And I'm unfortunately not as in tune with where market makers and institutions are positioned in terms of that. But just based on the chart, based on the outlook, based on the reaction to Jerome Powell, I don't see anything inspiring.
I would just add too that at 60,000 plus, institutions were like, some of them, darn, I missed this. Can't wait for it to go lower. And now we're barely hanging on to 20,000, right? And you would have thought those buyers would have been able to hold this area. So I just think just because of that, people are probably saying, why get in now? Maybe I could wait 6 months. There's really no economic catalyst to make any of these markets go higher. So again, it all depends on what your outlook is, right? If you do think you're a long-term investor and your outlook's long, 5,000 here or there isn't really big. If you think it's going to 60 or 100,000 again, but for short-term traders, I don't really see any reason why this market would go to 30 from here or even back to 25.
No.
So.
The only reason you would buy now is because you believe that there is a potential bullish catalyst on the horizon that you may miss out on, in terms of actually clicking the buy button, in terms of when that news hits. And I think if you're just looking at it from a fundamental perspective and technical perspective, there's no real reason to dip into the markets. And I don't think that fear is high enough yet in terms of that. We barely heard the EU energy narrative as well. And so, I don't see a catalyst to inspire, but I guess at the end of the day, if you're literally 100% cash and you're like, oh my God, I'm going to be gone for September on a sabbatical or vacation or something like that, then placing some buys here and placing stink bids near lows, recent lows, wouldn't be the worst idea. Because at the end of the day, maybe you get a bounce at the lows, then you can sell that off if you get sketched out, towards the end of September again. That would probably be my best play if you really wanted to get in the market and not miss out on a beat. So
yeah, I'm sticking to my story of our true low coming somewhere between the end of September and the beginning of November. I think that's a big possible reality. I think anything between now and there towards the upward side is just going to be a bear market relief rally, and that's it. I just have no conviction of this market getting out of these ranges permanently right now. So It is what it is, and it's going to carry it's going to carry the rest of the market with it. So I wouldn't expect, except for some individual outliers, anything to have the propulsion to go back up towards where it was prior to the crash. So,
and the reason we do what we do, I mean, most of the Trade the Chain members, I would assume, and based on some of their reports of success, is their cash position is probably higher.
Yeah.
In comparison to several months ago, which creates more opportunity, which also gives you a buffer because you don't need to catch the immediate lows. If your cash position is higher, you have a little bit more risk to play around with as well. Potentially, maybe you stash that cash away and put it back in the market. But if you're thinking about it, you have a higher cash position, you have more leeway for your long-term investments.
Yeah, and to what Nick's saying, the more cash that you stack off of your small wins here and there. As long as you don't elevate the size of your normal bets, what Nick said, you're basically de-risking with every stack of cash that you're increasing, right? So if you're trading, let's just call it $1,000 trade, and you're making profits, your stack started at 5,000, now it's at 10,000, but you're still making $1,000 trades. You're actually de-risking with the accumulation by sticking to that amount of that size of an amount of trade. Now, if you raise that proportion to your stack cash, your risk hasn't lessened any. So, good thing to bear in mind, especially as we try to make money going through these markets with no real clear vision or path forward as of yet, except our sentiment feelings are to the low side. But we'll see. We keep coming on here every day just to keep, giving our point of view and what we're seeing in our daily work. So that being said, hang on to your handlebars, guys. It's Wednesday, and if you're a TTC member, do not forget our 5 o'clock members AMA today, live Q&A, 5 p.m. Eastern time. Emails went out, Twitter went out, all that stuff. So definitely hop in, join. If you can't make it for some ungodly reason, I couldn't understand why you wouldn't be able to make it. We'll post a recorded version of it tomorrow on the channel in the AMA section. So that being said,
also hold on. Yeah. Well, I'm on CoinDesk TV in 35 minutes. So CoinDesk TV, all about, actually, I'll post it in the chat right now for the link. It's on our Twitter as well.
Yep, that's right. I forgot about that. Thanks for bringing that up, Nick.
Actually, can you post it, Alex? For some reason, I can't post. I added it to our private chat. So if you can upload that to the comments.
Sure. All right. There you go, folks. Click on it. Go to it. He's on at 3 o'clock. CoinDesk TV to talk about what's happening in the market. So thank you, everybody, for joining us. We will see you again tomorrow. And don't forget to sign up for that newsletter, the free newsletter at the top of the pin to the top of the live chat. Thank you very much, guys.